And good morning, everyone. Welcome to TopstepTV, the London session. My name is Deeyana Angelo. I have been trading for about 17 years now, and 12 years out of that I've been trading futures. And although I am now Series 3 licensed, we still need that disclaimer that Bruno was so kind to put in the chat because I'm not a CTA. So anything you see here is for educational purposes only. Now this is the Thanksgiving week, so whoever is celebrating, happy early Thanksgiving. It is not a holiday in the UK, however we are still going to be offline tomorrow and on Friday. So all of the broadcast will be off air until next week. So just keep that in mind. Now you may have noticed that we have some new features with the lockouts. I have been using that very nicely because it is similar to what I have on some of my other platforms. But I'm very, very happy that that has been brought into Topstep X now. I'm just going to quickly show you how that works. So let's grab the one that I didn't lock out. So when you click on the lockout button, before it was just like one button, lock me out for the rest of the day. Well, now you have some options. I'm pretty sure most of you have already tested this out, but I can say that it does work really well. I have not seen any bugs with it, so that's always a good thing. So basically you can lock yourself out for 15 minutes, 30 minutes, 1 hour, or all day. But what I like to do, because I have a pretty specific time of day in mind when I'm trading different products, I like to lock myself out until the time when I know that my edge exists. And for me, that is usually after the initial balance sets and then about 30 to 60 minutes after, regardless of what product we're talking. So for me, that is about 3:15, let's say, if I'm going to trade crude oil. I don't like really trading it for London, so I will be locking myself up until 3:30 p.m. my time, which is around about the time when the initial balance is over. We have the C period TPO, and it's kind of that time when the forex options have a whole bunch of expiries. So basically that can lead to some of these index correlated products, sorry, not index correlated, forex linked products to also do something interesting in regards to the volume, reversals, or a continuation of the move if contextually that makes sense. So that all works perfectly. It's just it's still amazing to me that they're offering this like free of charge. But yeah, today I want to talk about a little bit about volatility indexes because that is something that I do look at when I'm trying to decide what I'm going to be trading. Because you guys know that whilst I specialize in energies and in metals, if you've been here for a hot minute, you know that I will be trading different things on different days. And volatility indexes can actually help you to figure out where the party is for intraday trading. Now CME have this like login thing now, so you would need to like be logged in to see the volatility indexes. But here they are. Basically, you have a whole bunch of them. Now, not every product is going to have a volatility index. Like, for example, they don't have it on gasoline futures or anything like that, but they do have it for natural gas, heating oil, and WTI crude oil. Out of all of these, you can see the natural gas volatility has actually come up quite a bit. But somehow that is not, like when I'm looking at the range that natural gas is doing, it is more than it was. And I mean, I suppose we do have some dedicated movement there. But yeah, out of all of the things that I'm looking at, natural gas and crude oil might be the ones for this particular time of the year. Why crude oil? Because anything over 35 in the volatility index, it tends to bring decent moves. I would actually prefer that is closer to 40 on crude oil, but you know, we work with what we've got. So when it comes to metals, copper has fallen sub the area that, or price of the volatility index that I want to see it at, which is usually 25. So we're a little bit under that, which means that you're going to have moves that are range bound. There's no, follow through and stuff, so it becomes a little bit more difficult. Silver is still doing well, as is platinum. Platinum is kind of on the cusp. So 24 is just about okay. Again, would like to see it over 25 if possible. And that can kind of tell you, okay, what is going on with the volatility index? Are we rising? Are we falling? And you can see that copper has fallen quite a bit. So it's actually fallen by 1.3%. That's not great, right? So I'm not going to be focusing on copper until that changes, and until we climb back up over 25. That's more, this is something that I put in my daily plans, and it's a very, very useful measure. Very useful measure. Like, many people look at ES VIX for the very same reason, to see whether you have the intraday moves that will be better for the day traders, and if not, they will wait until that changes. Maybe change a strategy, maybe look for more range bound moves. And in fact, let's see if we can get to the actual things. These are treasuries, end of day. So yeah, you can see a whole bunch of them here if you go to end of day, just to see exactly how much they changed. And you can see the trend here even in a little, this is new, they didn't have this before. They have like a little pulse sort of thing, like how strong is the trend. So that's pretty good. And we can see that pound is actually on the move. So the volatility has been increasing there. So yeah, it's a nice overview, just to, for those of you who constantly go, oh, why is this happening? Market is shit today. Maybe look at the volatility index in question. For those of you who trade DAX, similar thing, we seem to have fallen sub my designated sort of 17 minimum for DAX, and that means that any kind of momentum moves, I will stick away from them, and I will be maybe looking to fade things and wait until we establish maybe a neutral day type or some sort of a range, and then play that. But expecting to have like crazy momentum moves year round is neither realistic nor a very good practice for anyone who wants to do this permanently and seriously. So find a way through these volatility indexes that's going to tell you whether you should be looking for momentums or not. Now, depending on how well you're doing with, being flexible about the strategies you're supposed to be using on the day, if you're a momentum trader and there's no momentum, just stay out. There's always that option. You don't have to trade every day. But yeah, so hopefully that helps you to figure out where the party is and, where the movement is. So what am I looking at this morning? I have been looking at silver. I'm not going to trade it on this account because it's too big of a contract. Even the micro silver, for most of you, is not going to be an inappropriately sized product. But basically, we have a potential for value acceptance in silver. Platinum looks a little bit different because it actually opened inside value. So they are correlated. So precious metals such as silver, platinum, gold, they do have a pretty strong correlation between them, but they are different products. So you can have different volatility coming into them. If we can get a dedicated move down in silver, that would be a value acceptance trade. So I'm just going to put some of my levels here as usual. So the value high is 30,635. Whoa, okay. It would be good if I was on the same contract as the one that I'm looking at. So let me just change that quickly. For some reason that didn't change it. Why? We are in H, yeah, so what's going on there? It's a bit weird. My platform malfunctioned there for a minute. So yeah, 3160. For some reason it didn't change the contract when I wanted it to. So okay, there we go. So that is value high. London specific value high. And as you can see, we're already trying to go below that VWAP. For London trades, I do want to see weakness of VWAP as well. So it's not like, oh yeah, we're just looking for a value acceptance, because London can turn things around quite frequently. And then the value low is offering us a pretty decent profit margin. If you remember, yesterday I was talking about the profit margin on the setup and how copper yesterday had a very small value. Well, silver has a pretty decent value, so this would be definitely something to consider. You don't even have to rush because of the profit margin availability. There are some levels inside it, so 30.8 is average session range low. Let's do that as well. So generally, if this breaks down, it has a pretty decent chance of at least getting to 30.8, maybe even the full value rotation at 30.71. Now, whether platinum follows, that's another thing, because platinum, to me, I would be looking to fade the moves in platinum unless we can get a dedicated move below the entirety of the value area, because we opened inside it and just kind of sort of started trickling. So from that perspective of, you know, breakout momentum trade, silver has a higher volatility index. It is offering a better profit margin and a safer setup, whereby we open outside of value, fell into it, and are now accepting prices below overnight VWAP. In contrast to that, platinum is opening inside value, also trickling down, but now not really having, like if you look at the 30-minute chart, it's all very wicky. So look at the difference of the wicks in, you know, just like pure candlestick sort of basic analysis. Which one has wicks? Well, silver doesn't. That indicates a stronger move. Platinum messing around right around the edge of the value area. So they are correlated, but obviously that volatility index is bringing more strength into the directional moves. Let's have a look at what's happening in the questions. I made 5K of XFA and lost 4.3K. How do I control my emotions? Daily loss limit, man. You know, first of all, you know how I always bang on, actually, I don't know whether you're new here or not, but I always bang on about position sizing and not sizing up, not having the dollars in your eyes and wanting to be rich yesterday, right? So this is a long-term game. If you want longevity in the game, you have to size appropriately. You know, just by the fact that you told me you made 5K yesterday, you're either caught a trending day and then you got stuck in, I think it was a range-bound day on equities yesterday, and I'm gonna guess you, like, tell me what you traded, and then, you know, we can discuss more, because when people go, oh, I made 5K, but I don't know what you were trading, you know, how can I, you know, have a look at what's going on? When were you trading NQ? Were you trading ES? Were you trading copper? Were you trading platinum? Like, what were you trading? And then once you give me those details, we can have a look at the day type. Never mind what you made or lost and the fact that you lost your, you know, you went on tilt and completely lost yourself. we can have a look at what was the cause of that. Because trending days are easy to make money in for most people. Because, I call it the PCP trade, point, click, and pray, right? And when something is just going one way and you point, click, and pray. But every time we get into a range-bound day, people start complaining and they say, oh my God, I got chopped up, I lost a lot of money. That means that your skills are not there yet. So you're only making money in one type of a market. And, if you want to keep trading every single day, that can't be the case. You have to be able to develop your strategies for a range-bound day and the momentum type trades. Rather than looking for breakouts, always look at fading some of the moves at very important data points that I bang on about. We have value areas, average. I'm a very data-driven trader, and the reason why I use the levels that I do is because they're dragged straight from either order flow, distribution curves, algorithmic ranges, or an options chain. Like that's the 4 pillars of the Marcus Sorka's method, right? So because of that, you have to have a look at the day type. Was the cause... So sure, yeah, you probably derailed the account because of the emotions, but what was the cause of that? And nearly always, like 97% of the time, is the fact that the trader is ill-equipped to deal with the type of a day that you have that comes right after the big win. Right? So it's not necessarily like, oh, you're a shit trader. You're probably quite a capable trader, but you're not really taking in the data that the day is presenting, or you're just, rushing. You're going into trades without full understanding of what is happening on the day. That is also a big problem. If you were trading NQ, so let me just see whether you answered. Yeah, I love range-bound days as well. Yeah, absolutely. Russian? Not Russian, I am Serbian. So I don't see your answer yet, but if you can tell me like I said, what were you trading? So just to clarify that, I was born and raised in Belgrade in Serbia, but I've lived in the UK for over 20 years now. So I've basically come into a point where I've lived in the UK longer than I have in Belgrade. So yeah. I'm a naturalized British citizen, so yeah. Where is so I still don't see what you were trading. So give me more information, Hariram, and then we can have a look at what happened, and we can maybe look at some data points and get you to get better maybe at the type of a day that we had yesterday. So yeah. It's nice to know people still think I look all right, even though I'm in a bit of a crash from my stupid disease. So yeah, let's go over some other questions while we wait for Hariram to actually tell us what he was trading. Casey Casual says, guys, I totally got destroyed yesterday. Hit my 1K daily loss. But you at least had a 1K daily loss. So I'm going to say it doesn't matter that you didn't have a good day. Everybody's going to have a bad day. Losses are definitely a part of this game. It's how you lose. That's where the big secret is. How much do you allow yourself to get affected by what's going on? Do you have a daily loss limit that is a portion of your account balance? And usually it should be between 4 and 10 divided. So whatever your account balance is, divide that by 4 and 10, that becomes your daily loss limit. And put that personal daily loss limit in there and forget about it, just like we used to have the daily loss limits before. We actually had somebody during the main broadcast say it was group coaching group coaching with Hogue. So he said that since the removal of the daily loss limit, they can't pass combines. And, everybody who was in there, I think it was JD and Hogue, they both said, well, put it back. There's nothing to stop you from putting back the daily loss limit. And also on some of the other platforms, they still have it. It hasn't been changed. The only place where that's been changed is their native Topstep platform. Yeah, so I see almost everyone had the same experience. Lol. I'm so glad we can move on. Insane tilt trading for me, first time in months. Okay, so 2 positive things there, Casey, is that it's the first day where you went nuts. So that means you've achieved a level of maturity where those sort of days are not happening to you on a weekly basis. Because, we see people that are like, oh, I had a great day. And then the next day it's a complete car crash. And then, car crash, then one good day. Then car crash, one good day. It's, so you've reached a level of competence and skill where you can have months of decent trading and then one bad day. That's absolutely fine. Just, take it on the chin and move on. Acceptance should be a great part of being a trader. That's why, whilst most of us still do have egos because we spent a long time developing our skills, so we don't take too kindly when people are like sort of like, oh yeah, they've been trading for all of like 3 months, and they come and attack those of us who've been trading for years. So we don't take too kindly about those kind of behaviors. However, when it comes to being wrong and just saying, wow, I was a muppet today, we're all pretty adept at just recognizing when we've underperformed on the day. That's, it's just a part of it. Nobody's a wizard, God's gift to trading world. In fact, most of us have been doing this for a long time. You will never hear any of us go, I'm the best trader that ever lived. Well, we're all just going to say, I'm okay. I'm a decent trader, but whoever's trading that they're the best trader here, best trader there, always take it with a pinch of salt, because it's either a marketing strategy or they're just completely deluded or they haven't traded long enough. It'll be one of those. So yeah, Casey, don't be too hard on yourself. That's actually pretty good going. But if you were trading equities, yeah, I mean, yesterday was a bit of a chop. Kind of moved up, but very choppy. So I can understand why people had problems with that. The previous day was much smoother. I can also see why people would have largely made money, because it was like an easier day. Whenever you have, 30-minute candles that are wicked out really badly, that's always hard to trade. I think I was talking about crude oil doing that the previous day. So 2 days ago, crude oil was doing horrid things like that. And, whatever stop loss, unless you were using like over 70 tick stop, you would have been stopped out either way, longs or shorts. And that means that a lot of people won't be doing that well unless you were just looking for maybe quick moves, but at the same time, those moves weren't that quick either. So it's definitely a challenging thing to find a very good trade when the 30-minute candles are just wicking out. And it's not a range. It's sort of a trend, but it's a bit wicky, bit temperamental on both sides. Michael says, hey Dee, can you recommend a source to get fundamental data and news about platinum? As far as I know, platinum is also related to the automotive industry. Yeah, platinum is used in a whole bunch of things. I mean, just like copper is used in a whole bunch of things. You use it in, telephony, you use it in... you use it in internet connections, certain internet connections, obviously, because it's all just to do with copper wires and stuff. And then you use it in heating elements. And similarly, platinum has many different applications. Automotive industry is one of them. So there is a general demand for platinum. But when it comes to the fundamental data, I'm going to be honest, I don't really look at that much fundamental data. I probably look at more fundamentals for copper because it is connected to inflation. So CPI is one of the releases where copper will move quite a lot. And also any kind of economic details in regards to the strength of the economy, like consumer confidence and things like that. But when it comes to platinum, it's like it kind of doesn't react the same way. It doesn't have the same connection. So obviously, if you're going to look at fundamental data, I'm not going to be your person, right? So I'm a technical trader by a mile. Like 70% of what I do is trying to, sift out where we're going to find mispriced opportunities intraday. And then based on a whole bunch of data sets that is taken from distribution curve, auction theory, supply and demand areas and bounces and reversals around them, and also options data. So, I will make up my mind what to do with it. Like today, inside value open, tried to go below it. We are now seeing responsive buying, like I said we will, because I was skeptical that we're going to kind of just keep falling, unlike silver. So silver and platinum are a bit different. There's a technical difference. That's not a fundamental difference, right? So I am not going to be your person to tell you where to find fundamental data about platinum. The only thing I can tell you is that I find the options related data, which is not, it's still technical, but I find it very, very useful. I have mental Q for that. Both Anne-Marie and myself, we use mental Q levels quite a lot. They are one of the, I think, the only companies that do alternative markets options data. And that's why we use them, So they're actually about to roll out like intraday gamma flows and stuff, which will be endlessly useful. But for now, you can just get the levels that they provide. They are once a day. And even though it's still somewhat lagging because it's technically previous day's data, it's still really, really useful because you have these levels that specifically on platinum stay there for days on end. Like, if you get, let's say 950 is a point of reversal that was acting as either support or resistance throughout the week. And, let's say we had a whole bunch of calls up there, that will remain some sort of a level in the options throughout at least a couple of weeks until everything changes or we reach some new price levels, right? Can you go over gold? Well, to me, gold is in rollover, and until that is over, gold's volatility index has gone down, so I can go over it. But we've just rolled into the new month, and even though there's movement in it, in the last couple of days, it's been terrible. So it's gold. So let me have a look at the levels. So Asia's got a little bit nuts over it. Let's change this. I want the main contract. Let's change everything to gold. I always do this. No. I will get back to the full screen. There we go. All right, so 4-hour chart down here, 30-minute chart up here, 100-tick chart here. First things first, we're opening above value, but we're opening sort of within the vicinity of value. We tried to go higher by 1 tick. And now it's just not really doing much. So we have a lowish initial balance size, only 85 ticks. That's nothing because we have 203 ticks for that shortened London session that I like to use. So for me, London so far is a whole bunch of meh. But, gun to the head, what would I do with this? Well, if we manage to get past VWAP, because we do have a potential for a neutral day type, which means nothing's going to happen. So I do need to see a more committed move to the downside. And in that case, you may have a move that goes down to 26.59. Maybe 26.55 as well as an extended target. But it really, it needs to create some single prints to the downside. And the danger there is that because we already extended by 1 tick upside, then we're going to end up in a neutral day type. And it's just like an elastic band being pulled from both sides. And both sides have an equal pull and nobody's winning. So that's the whole point of the range bound day. So I'm not really that enticed with gold today. We had an accumulation phase all day yesterday. Well, not all day, but from that post NY cut time of day when the Forex options expire, it was just so range bound. So that is an accumulation phase. We're now in a markup phase. On a 4-hour chart, we did go over a high. The next stopping point might be 26.93 as a speed bump to the upside. So that's the upside and downside targets. I never just do like one thing unless I'm trading equities or something. I will always have hypotheses for both sides. So it's like, if we keep going higher with this markup phase, where do I see this stopping? And then I will try and match that with anything that I have in the options or algorithmic ranges, exhaustions, and all of that. And yeah, we do have a nice sort of average daily range high around 26.96, and also average session range high from London at 26.91. So in and about that 93 area is there's a lot of interest. So that could be something to look at. We also have a high volume level from the 0DT options that's sitting right at 26.95. Now on the first run up, if we have a very large move to those HVLs, I would be looking for a reversal. So the bigger the move, the less likelihood it's just going to keep going. If it was somewhere nearby, if it was a level in play, I would maybe look for a test of it and then another break on the second or third try. However, because it's so far away, it would be a reversal hypo for myself. So that's to the upside. And then, like I said, to the downside, we have 26.59 all the way down to 26.55, which is where the GEX2 level is. And at that point, if we manage to go lower than that, I would expect to see some chop before we do anything, or maybe settle in for the night, for the day. But yeah, those would be my sort of ballpark targets on larger time frames that are not specific to the London session, but just to the overall market outlook, market state. Yanub, I think that's how you pronounce your name. Do you also get fear of losing the next trade when you are on it? No, I don't really get fear of losing or winning. But, you know, I did when I was a novice trader. So, yeah, so I see that Harinan says he trades only NQ. Yeah, I'm not surprised. Okay, so NQ is an emotional roller coaster. So you can make a lot, but when it punishes you a lot, that's what it does, right? So this is why you need to have some additional risk control. So maybe put $1,000 loss limit on your account, and when you've made 5K, then at least you have 5 days to hit that 1K loss limit, and then, you know. But this is why I don't teach people on NQ. This is why I specifically say to anyone who hasn't been trading for like a decade, stick away from NQ. And the longer that you trade, and the more that your brain starts to age, NQ is going to become tiresome, very tiresome. You know, I got tired of NQ bullshit like 2 years into trading it, and I'm somebody who trades crude oil, and crude oil can be just as whippy. However, it does go on more reliable trends, and it's a more technical instrument in general. But NQ to me is just like, I liken it to a crazy younger sister of ES that likes to party, do drugs, you know, go out all the time, you know, just like, yay, let's do this. So it's like a slightly psychopathic person with a lot of energy. That's how I look at NQ. And just like the girl who's super fun, and, you know, you have a lot of fun with her, she's always going out, and, you know, it's always clubbing and drinking a lot and, everything's kicking off. Usually those sorts of individuals are quite unstable as well, because then they get crashed from all the partying, then they're very depressed and nothing happens, but they're still very volatile personality-wise, right? And that's how I look at NQ. So it can give you a lot, and it's super fun when it's working, but when it's not working, it's a nightmare. So I'm turning 44 next week, so I cannot deal with that sort of instability. I consider myself to be a pretty serious trader. And whilst people know that I have multiple sources of income, 3/4 of that is related to trading, right? Whether through mechanical trading systems or software development in trading, or creating software for banks. So that's another thing that one of my companies does. It's all, like, literally 3/4 of it is related to some sort of trading activities. But, when it comes to manual trading and me actually clicking buttons, aside from our algorithms and decision things and, all of the stuff that we've automated, it's a completely different ball game. Like, I personally need a very stable product these days, and that's not going to be NQ. If I'm going to trade equities, I trade DAX a lot when the market state is appropriate for my style of trading. So I still won't trade it every day. There are some weeks where I completely stay away from DAX. So you have to decide whether NQ is appropriate for your personality. Now, I know that it's fast, but think of it this way. Do you like it because it gives you instant gratification when it does work? And if that's the case, that's a deeper problem. Because trading shouldn't be about instant gratification. Trading is actually best done when you are aware that you're not going to have profits every day, and that if you're only a one-sided trader who trades momentum, that you need some very specific market states in order for that to work consistently. So take this under advisement. Time is the only judge of your approach. Time. Nothing else. No number of P&L profits, that you can generate in one day. No, tens of thousands of, dollars that some people make in one day, but then go on a daily loss limit bonanza for all of the other days. Time is the only judge. If you cannot make something work consistently for years on end, so not just a week, 2 days, no, does what you're doing, and I'm not talking just about technical side. I'm talking about the emotional side of things as well. If you cannot stay emotionally stable enough, emotionally resilient enough to withstand what NQ does on a lot of the days, then consider changing product, going to YM, going to ES. I know that Jack makes fun of YM a lot, but I have traders who have gone from NQ to YM quite happily. I also have traders who have gotten sick of NQ and they've gone to ES. And I've also had traders who have started on ES and NQ, got completely sick of both of them, because they're generally one-sided products that can whip around and mess you around, and they've moved into crude oil and gold, and they're pretty happy. So you have to match the personality of the system that you're using and the product that you're trading so that you can last a very, very long time in this game. If it's an emotional roller coaster where you're up, 5K, down 4.3K the next day, that's not a good thing. It's not a good thing. That's like a lot of variability in your P&L. So you need to aim for low variability where your losses are contained. So it's not about being profitable every day. No. I know we saw Dilesh, but that's not what most people should strive for. You need to strive for a generally stable profit curve that doesn't have massive losses, but it also doesn't have massive outlier wins. you see those types of P&Ls where, it's low loss, and then a big jump, more in swing trading. You should not be seeing that in intraday. And if you're seeing your P&L curve wag up and down like the horse drawers, lack of other sayings, for the lack of a better word, that's not a good thing. So work on tightening that up. It's not about fast profits. It's about longevity and consistency. And obviously your mental health as well, man. Like, who wants to go through up 5K, down 4.3K? So you've had a great day, and then the very next day you derail that completely. That doesn't feel good. It's very stressful. So why do you guys do it to yourselves? I personally don't like huge P&L swings. And I prefer to have stability. If I'm not doing well, if I go into a drawdown, I will immediately go back down to micros in some of these accounts. And, if we start to bleed money from our large account, we're immediately cutting size down to like a tenth of what it is. And then we are doing a lot of tests and stuff. We do have some training algorithms as a part of the code that will optimize things on the back end. But I'm still the one who has to decide which of them will be switched on and when, right? So there's still a lot of responsibility on my side. But for the manual trading part, you don't have that. So you have to rely on yourself to not malfunction, right? And that involves finding a product where you're not going to lose your shit when things are not going well. And I'm sorry for being, a little bit, blunt, but sometimes that's what we need. We need a bit of tough love. I had a bit of tough love when I was first in a prop trading company where I was trading crude oil in and out, and it was a trending day. So I was like, oh yeah, we're trading, we're doing this, yes. And at the end of it, my colleague who sat next to me, much more senior at that point than me, and frankly a bit of a dick. But that's beside the point, because he did, he said something that really resonated with me. And he said, right, so after all of that, hopping in and out, how much did you make? Like net ticks. And I looked, and I think it was like, I don't know, some pitiful amount, like, maybe 12 ticks or something. And he said, yeah, so your broker is very happy now. Whilst you were doing that, I sat in one trade, paid one round turn, and made 60 ticks. So I was like, good point. So that's when I started to realize that what I was doing as a swing trader, that I need to find some sort of a middle ground somewhere, right? I need to find a way to hold trades longer, to find better trading opportunities by not jumping in and out and getting paper cuts along the way whilst making peanuts in ticks. And, I worked very hard to find a middle ground between the accuracy that I'm comfortable with and the risk reward that I'm comfortable with. So maybe that's something you need to look into. But data is your friend whenever you underperform, whether emotionally or not. See the time of day when you started to derail the account and see what happened in the markets then. So it doesn't matter, like people say, I couldn't hold on to my trade. Why couldn't you hold on to your trade? Because NQ is nuts. That's why. So you're either in with too much size, or your stop loss is not large enough to withstand whatever NQ is doing. So there's a disparity between what you're doing as a strategy and what the underlying market is doing. Something needs a tweak. So go do a deep dive into it and see what sort of a stop loss would have been needed in order to accommodate the move that you experienced during Asia. And then lower your size to accommodate that stop to fit with your risk. Don't just keep doing paper cuts and not change stop loss size, because that's one way to completely get the opposite result of what we want. So hopefully that helps you. It's a difficult thing. System design is not to be taken lightly. It's an entire science. It's a very, intraday trading is one of those things that is so sensitive to any inconsistencies you have. Think of anything that you change intraday, right down to the profit target you use, or the stop loss, the time of day that you're trading, the number of trades per day that you're doing, all of it is a single variable. So when people come to me and they go, it's not working, and I'm like, how do you trade? What do you change? Very few people are like, no, I don't change anything. I always use the same formula to get my volatility for, usually it's the technical guys who come to me and who are like, yes, I have a way to scale my stops in regards to the volatility we're experiencing. And the targets also are malleable in the same way. However, most people come to me and they go, I ask, what's your average stop loss size? And they're like, oh, between 50 to 100. That's 100% increase. Is it a 50, 75, or 100? Which one is it? It can't be both. So it's like, what sort of targets are you looking for? Oh, it depends. On what? There's something that to be said for a statistically viable target within the day or within the session that you're trading. So it depends should not be the answer in system design. Because if you were a computer, there's no such thing as it depends. You have to define a target. So if you don't, that's way too discretionary. You can absolutely have discretion of whether you're going to have an early exit or whether you might increase your target. But your system design needs to have a default risk reward. Default R multiple that you're aiming for based on the accuracy of the system, and then working in a fine balance with the risk reward expectations. For me, that's usually 2R, 70 ticks. Okay? That's my target. So whatever I'm looking at in the products that I'm looking at, I need to make sure that I get a opportunity that will offer me 70 ticks as an intrinsic value. Again, for the lack of a better word, profit margin on the trade before you hit any problematic levels. So system design is something that is extremely difficult and it takes a long time to get right. And yet, people cannot see further than their P&L. Oh, I lost money. Well, there's a reason for it. Let's explore, right? So maybe NQ is not your jam. Let's just finish it at that. There are other products out there, guys. NQ is not the only thing. This is the sole reason for doing the London session, even though, I'm not a huge fan of trading these products for London, but it's a useful thing, to introduce you to different products, alternative markets. If you're really into equities, take a look at YM. It's RTY, there's other things out there. Verti says, is this week kind of slow due to the holiday in America? Is this the usual go over this week? I mean, yeah, people will be traveling. A lot of people will already be away from their offices. So naturally, you might have lower volumes. But does that mean there's no opportunities? No, I mean, there will be opportunities. It's just they may not be as crazy. It might not be a momentum opportunity. Maybe it's a range bound opportunity, But again, try to look at maybe the initial balance extensions. And if there's no initial balance extension, typically that tends to lead to a quieter day. I can see that yesterday, I think ES took its sorry time to actually get out of initial balance. That's usually a bad sign, right? Yeah, I mean, it took nearly 2.5 hours to exit the initial balance. So yeah, we had a bounce from value high, but it eventually crept up, but it was a difficult day. One thing that would have kept me away from it was the fact that we were still inside the initial balance. I want to see price moving outside of it before I'm going to do anything. There's very few opportunities where I'm like, yeah, initial balance, let's plow in. Generally, I want to see initiative activity, which is always price attempting to leave the first hour of trading. If it doesn't, it's always much, much more difficult. So yeah, there will be less volume and different kinds of opportunities. Chief, Truckalot. That's a hilarious name. That's great. If you started over, how would you learn to trade futures? I would go to a prop firm before I went to a prop firm. So I only went into futures. So I'm from the UK, right? So over here in the UK in 2007, 2008, we did have a lot of Forex and CFD brokers, and it was all a buzz sort of thing. Yeah, trade Forex, yeah, it's brilliant, blah, blah, blah. And it was like very aggressive marketing as well. So there was that. Futures were not a thing. I'm not even sure that futures in some countries that, like for example, South Africa, they can't even trade futures. They are not allowed because CFTC considers South Africa to be a problematic sort of third world country, even though it's far from the truth, right? They have the problems, but if you've actually ever been there, it's actually a pretty modern country, right? However, CFTC doesn't see it that way. It sees it as a problematic area of the world. So they can't do futures. Now, UK and EU, we do have futures, but they weren't that popular. They're getting more popular now that EU is stepping in to regulate CFDs a lot better, because CFDs are partly regulated. They're not standardized contracts. The spreads are absolutely horrendous. So when I traded euro dollar for 5 years, and I swing traded it, managed to get my first 6-figure account in a couple of years. To me, that was, absolutely amazing. And then after 5 years of that, we had the European austerity measures. What happened to euro is that it got locked down completely. And I recognized that I needed to become an intraday trader. So what would I have changed? I would have gone to futures sooner, maybe after the first 2 years of messing around as a swing trader. Whilst I did very well in Forex and CFDs, there was a lot of shake-up in there, and it was harder to trade because you don't have information about order flow. You don't have a centralized exchange that everybody trades on. So everything is much harder to see. Like, for example, if I look at the DOM, I can see everybody's orders. I can see exactly what's going on. So if I look at Platinum now, you see the sticky outie 33 units available at 9353. They're going to hunt that. Like that gives me a directional bias to the short, because I know that you can at least get a scalp down. So it's it's one of those little helper things where you just don't have that. And here they are. So they're trying to move it down. They're trying to hunt it. You don't have this information for any other market. And now that I know to look into these sorts of things, I would miss that. I don't even know how I would trade without it, just with, yes, you can trade with candlesticks only. But to me, having gone through the other side and trading swing and then intraday, just through candlesticks without order flow, when I started learning about order flow and the auction theory, it was mind-blowingly transformative. Because suddenly I could get a really deep understanding of what's going on. So I never had that moment of, even if a trade is wrong, I'm never like, oh, what's happening? Like, the only time I have that is when everything is locked down and nothing's moving, so the volatility dies. And that would be the only time that really irks me. So I'm in a trade and nothing's happening. It's not going against me, and it's not going in my favor either. So it's like, it's like RTH. We're in regular trading hours. Move your ass. What is going on? That's the only thing that gets me on tilt, where I'm just sitting there, is doing nothing, and my mental capital is just slowly bubbling up to leave me for that day. And to go and rent a flat or something. So those sorts of things would be very, very useful for me in the early days. So I would say go to futures sooner. Apart from that, I didn't really, I'm not one of those people who had like tragic sort of story where I lost a ton of money and stuff. My couple of bigger losses or more significant losses were already at the time when I had made the cash and then I messed it up. The only time that wasn't the case was when I screwed up 70K pot, and that was it was within the first 9 months. So I was sizing up like a lunatic, which is where I learned not to size up. And I did really well, right? So I was aggressively using like 10% per trade and then holding my trades for 2 weeks. So I kind of justified that with, oh, it'll be fine because I only trade once every couple of weeks, right? Wrong. So I got biased on one trade and didn't size down, and I kept adding and 70K went down the drain. But it was all profits. Like, I didn't put any extra money in there, so that didn't make any impact apart from my ego being a bit bruised. It was all just profits, and it was only like 9 months of work, so it wasn't that tragic. And then the second time around, I was already a prop trader, already trading a 7-figure account, and got stung on an FOMC position that I couldn't get out of, which actually went my way for the first sort of like 5-10 minutes. But then it turned around. I couldn't exit, and it just smacked me on the face for like 10% of the account, which was very painful. And if I didn't have a heart attack then, probably never will. So yeah, let's have a look at some more questions. Are you normally trading on a 15-minute chart? If you notice here, I have multitude of charts. I also have bookmap on another screen. I don't marry myself to any particular chart. I will be looking at a 4-hour if necessary. I look at the daily chart every single day. Depending on the type of the setup that I'm looking for, I will be using anything from a 100-tick chart up to a 30-minute chart. So to me, it's all part of the OODA loops, OODA loops, where the time frame will be serving the strategy I'm using for a particular type of the setup. If it's a momentum trade, I am not going to be using 30-minute charts or 15-minute charts for that. I will be using a 100-tick chart to make sure I obtain a good entry. If I'm using a reversal setup, I actually want the reversal to be sustained. So this is where failed auctions, I will wait for a 15-minute time frame to finish, maybe even a 30-minute time frame to finish, because I want to see that decision of going back into initial balance and hanging inside it, preferably even closing it. But again, it will be case by case where we're coming from. Do we have a level where we're bouncing from into the failed auction? All of that will be like an additional little confluence thing that will help me make a decision of what time frame I should be looking at. So yes, I do use 15 minutes. Yes, I do use 30 minutes, but I also look at daily, 4-hour, 100 ticks, bookmap, case by case. But 15 minutes is probably one of the best time frames to start on as a trader. It's just large enough to have enough trading information to not get you all cut up in like stupid paper cuts, and small enough to enable a decent sized stop loss that's not going to be a million miles off unless you're trading NQ. However, in crude oil, platinum, gold, well, gold might be a little bit jumpy right now with the big ranges, but certainly platinum, crude oil, copper, 35 ticks, more than enough. 15-minute chart, you'll last like an hour, right? Haram says, thanks for slapping some sense into me. Really needed to curb down my expectations from the market. Yes, and you'll find that you'll do much better. You know, maybe not, you know, the 5K might be per day, might be something to look at in the future, but at the moment, just size down. You know, stability and mental health over any profits any day. Paul H. Hey, Paul, good to see you here. I'm trying to master range days in the practice account. Do you have a method you can easily share? Well, not easily, because there are a few tricks to it. But look at the initial balance extensions and neutral days. At the very least, look at the edges of the session. So usually when a 30-minute chart looks very wicky and you have two soldiers for the first sort of 30 for the first hour of the trading day, that rarely brings a great trending day, right? Also, when you have a big initial balance day, so let's say for the first 30 minutes the entirety of the day's range is gone, that's not a good thing for a trending day. So I would be looking to immediately default to looking for a better trading location as the day goes on, like Hogue likes to say, because a very large initial balance that exhausts the full average daily range is an outlier. It shouldn't happen. It's too quick, too soon, too fast, too furious, right? Usually a hallmark of an impending range-bound day. Once you get those initial sort of signs that you might be looking at a problematic day, look to take profits in the middle of the range. So stay away from the middles. And there are a multitude of ways to do that. I have my own way of doing it. But basically anything that's the middle of the range shouldn't be your trade location. It should be your target. So effectively look for a Dolby style trading, where you will be looking for trade locations at the edges of the session range, and then fading that to the middle. For the trade locations, sometimes I do like to use the volatility bands, and then I use the zone between the band 1 and band 2. So that kind of becomes my guide. But then sometimes they really love to do stop runs during range-bound days, so be careful of those too. Those are some of the tips that I can give for trading range-bound days that have been extremely helpful for me, somebody who came from a reversal, mean reversions type trading only in the beginning, many moons ago. And then I got really good at trading range. But it didn't come easily. It took me probably about 7 years before I was like, okay, I think I could trade ranges pretty well now. Before then it was like, oh, range-bound day, I hate you. All right, let's have a look. Hey Dee, why traders don't trade natural gas? Natural gas is pretty good, but it does have a nickname in the prop trading community. We call it the Black Widow. Why? Because it has these huge gaps. Now, in a lot of the prop firms that I worked for, you could hold the positions overnight. But there was a thing where you had to cut the overnight position in third to account for the overnight margin. And then we also had to calculate swaps and stuff. Not going to go into that right now because it's a little bit complex. But basically what used to happen is that a lot of people who held natural gas overnight, it does these massive gap openings. Now I can show you that just quickly on my other platform so I don't have to change anything. Let me see. Let me find natural gas. There it is. So just to give you an idea what it can do. So look at this is typical of natural gas. 176 points, 5.5% gap at the weekend open. 5.5% gap. Ouch. I mean, imagine you're a poor guy who's shorting somewhere around here, or even somewhere in the middle here, and this happens, and you're like, oh, my life is over. So because of those things, and it's not rare either. Look, here's another, nearly 3%. And here's another, again, 3%. So we call it the Black Widow, right? Now, it's not so much of a problem intraday, but natural gas, when it moves, it moves. It's it doesn't give you an opportunity. You already have to be in a trade in order to benefit from natural gas movement. If you're not in a trade, you're missing out. It's done. So that's the main reason, right? It's an unpredictable product with the gaps, but it's also so fast moving, and everything sort of is done in a flash. It's not as wicky as for the most part as NQ, and it's not that liquid either. So it's not the most liquid product out there. And usually people who trade natural gas are not necessarily speculators. Like there's a speculative aspect to it, whereas the NQ is like totally speculative. ES, now we have over 50% of 0DT options volume accounting for the day's volume. Over 50%, that's insane. But then you have, products like soybeans or, natural gas and stuff. Usually it's the hedgers that will be in there. So let's have a look at the ladder. So not the thickest market, right? 7 contracts, 9, 30, 18, 10. Not, it's not a super speculative market. So you have to be careful with the times of the year that you actually trade natural gas. Otherwise, it can be just range bound. Like I remember trying to trade it about 6 or 7 years ago. It was pretty quiet. I entered a position, waited for about an hour, nothing happened. I closed it for a few ticks, and that kind of kept happening. So it wasn't really enticing me to kind of go, yes, trade it definitely. If you want to run a swing trade, again, it's so dangerous, but it can be super rewarding if you get it right. You make a ton of money overnight. Jesse says, good morning, Dee. Are there any stocks that you look to help trading gold like the Mag 7 or NQ or ES? No, so gold is a commodity. It's not... So it's almost like the opposite to what the indices are. It's not an aggregation of other things that then get sort of spewed out, So it's not like, oh yeah, we can look at stocks to drive the gold prices. It's a true commodity that exists in the world. So it's, it's governed by the physical supply and demand. So how much gold do we dig out? How much gold is there left in the world? How much gold do the jewelers need for Christmas? Things like that. So it's not an aggregate of stocks that then gets spewed out into an index. That's why gold is the benchmark for many other things, like how the economy is doing, protection from inflation. That's what traditionally it used to be used for. I know that some people think that Bitcoin is now taking that over, but I think that Bitcoin is way too volatile to be any sort of a risk asset or a safe haven. I mean, how can Bitcoin be a safe haven? It's just like, it's like mind-blowing to me. But according to the old portfolio theory that kind of broke down during COVID, to be fair, gold used to be used as a protection from geopolitical risks and as a protection from inflation. Everybody would be buying gold, because what happens if we end up in a post-apocalyptic world? People who have gold will do pretty well, like actual physical gold. Because, commerce might break down. We've seen how quickly a lot of businesses closed during the semi-apocalypse that we had, which was COVID. Imagine if we had true apocalypse. So from that point of view, what would you be doing? Well, you would be buying and selling gold. That would be the new currency. Or if you play Fallout games, or you watched Fallout bottle caps. Maybe there's something to that. Make a new currency with bottle caps. It depends, right? However, you will not find the equivalent of the Mag 7 to go look at gold, right? So gold is a physical product, is governed by a true physical supply and demand, and there's no equivalent to it. So, unfortunately. Some professional traders like Lance Burstein say it's extremely stupid to focus only on trading futures like ES and NQ. I would be of that camp as well. He trades stocks very successfully. What is your opinion? So I have a long-term stock portfolio. I do like my slightly odder stocks. So I did enter into stocks like Palantir when it was $9. I'd see that that's come up quite a lot. I was in Nvidia, and then that was like years ago, and it went like up 30%. So I took it off. I was in Tesla for a while, same thing, went and made me 30%, took it off. Literally within like 2 months. So that to me was more like a swing trade type. Any kind of overpriced stocks, unless they're paying really good dividends, I'm generally not that interested in them. So I do think it's important, if you are in a financial situation where you are able to invest, to basically find some long-term stocks. But would I day trade stocks? F no. I was actually going to swear there. But no, I would never day trade stocks, because first of all, I know that I have several instruments that I look at, but it's always the same instruments. I don't have to spend like 2 hours looking at what stock is in play and, using like stock screeners and then to see whether, we can trade this and trade that. To me, that would be like the pinnacle of being stuck in personal hell. I don't like that. But I do have, long-term stock portfolio that I look at. A lot of the stocks that I've held in there, I've held them for like 3 to 7 years. Something that's really interesting to me that probably won't be good for another 10 years is the Virgin Galactic thing. So I'm still holding that. So I think they have a very good way. I entered at a very low price. I think it was like $5 when I entered it, and it's gone all the way down to $9. However, it climbed back up to 1,000. So depending on what happens over the next 10 years, that's actually one of the things that I'm willing to hold until the cows come home, right? If they do what they are planning to do with the space tourism, it will change how we look at going to space, definitely. So that's something that I would be looking for in disruptive tech. And also, I love my self-driving tech. So I've held the stock of Too Simple, which is actually incidentally a company that I used to recruit for on the IT recruitment side. It's a very interesting project, because what they're doing, they are using self-driving technologies for logistics. So it's not to transport people every day. It's literally trucks and all of the other stuff. So they're trying to automate things like mail deliveries and in general just logistics and transport of different goods and parcels. And to me, that has a disruptive potential, right? If that becomes the golden standard, they're one of the first companies that did it. And then obviously you have some of the other self-driving companies they're a little bit higher in price. So you have Aptiv, or at least I think they got bought by someone last time I looked. But then, you have to look at it from the point of view, do you want dividends out of it, or are you looking to profit from price appreciation? And that's a different goal, right? It's an entirely different goal. If you're looking at dividends, and to keep reinvesting dividends, then something that is really stable but has pretty good dividends like Ford would be a better option. So we can talk about goals and long-term investing strategies, but that's an entirely different ball game for me than intraday trading. However, I think that absolutely you should diversify into some stocks, however, not for day trading. Use day trading for speculation, right? For all of this stuff that we're doing here. And then long-term stocks that you pick for various purposes, either for dividend purposes or for price appreciation as well. And pick accordingly. But you can't pick a Ford stock. Like, let's say if you go into Ford because you're expecting it to make you money through price appreciation, that ain't happening. It's a stable stock. It hasn't really moved past like $7 to $9 for years. However, their dividends are frequently in 7 to 9% range. So, So yes, I would agree with Lance on that. Davey wants to know, what is your prognosis? Dr. D in the building. Of the market at this moment. Would you say it's bullish or bearish? Well, it's... Depending on the market we're talking about, I'm going to guess you are talking about equities, right? So let's go to equities. Let's go to ES, the golden standard of ES of equities. Let's have a look at the daily chart. What do you see? I mean, do we even need to discuss this? All-time highs, keep pushing up. What do you think that I'm doing? it's bullish, man. Like, this is why I don't like equities, because they're boring. For the most part, if we go back in time, what do? They go up. So yes, I'm bullish on equities. Do I sometimes look for mean reversion trade intraday? Yeah, but the conditions have to be pretty amazing for that. And it's usually a scalp. It's not going to be me holding, a swing position down forever and ever. Usually it's going to be a break of the initial balance. We're opening below the value area, and we're kind of coming into the time of day. If we've been rising and rising and rising, I want to see an extraordinarily positive delta that pushes everybody to go long. And then for power hour, in the last sort of 30 minutes, they run everybody over, right? That's one of the trades that I love doing. But it works on the short and long side. However, it's a very specific thing when the delta goes completely crazy and too many people are long. They get too long or too short. That's when the long squeeze and short squeezes are pretty juicy. Without that, it's long. So yeah, definitely bullish, man. People overcomplicate things. Like, if you're at an all-time high area and it keeps pushing up, there's no reaction from the supply that we created, a few days ago, a couple of weeks back, it's bullish. Don't go against it. It doesn't have to be that complicated, especially with equities. But you look at crude oil. So let's see a stark difference between the two. I did it again. Not interval. I need this. And then we're going to finish it up. Yeah. So look at crude oil. Bullish or bearish? Largely range bound with a bearish sentiment, right? But difficult to trade. Are we up? Are we down? Are we up? Are we down? Are we up? That's interesting to me, right? This is where I'm like, okay, let's play detective. What's crude oil going to do? So I like the fact that nearly every single day is different. But when equities traders look at crude oil, they're like, really? You trade that? I'm like, yes, it's beautiful. So I'm a bit of a weirdo. I like challenging products that are not point, click, and pray, and just click and buy. But that's me, All right, guys, let me just see if we have anything else. 100K in Discord. If you didn't check out our Discord, this is the perfect time to do it. I mean, amazing, right? 100,000 people in Discord. It's insane. So well done to our Topstep moderators, Topstep Discord moderators that do a lovely, lovely job. And I've already mentioned this. So with the upcoming holiday, we are going to be off air tomorrow and Friday. And that goes for the main broadcast as well. So enjoy the broadcast today, but I will not be here tomorrow for our regular Thursday developments, which means Coach Ray also gets a day off to be with his family. We heard his plans last week. So that's pretty much it for the day. No trades. I don't really see anything moving that I would jump into. Gold is died to death, like we said. Crude oil pretty range bound. So yeah, no trading. So this lockout that I did for myself last night, that was actually a pretty good idea. And I'm going to wait to see whether we have anything at all. And if not, I'm actually probably going to take the rest of the day off. So you don't have to trade this week. Here it says, Deeyana, if you double click on price, it will auto adjust sometimes. So that doesn't always work. Let me show you why I don't do the auto adjust. Because we go from, let's say, the weekly chart. Now that might auto adjust. But then you go from the weekly chart down to a 100 tick chart. And last time I checked, this didn't adjust properly. It adjusts for certain things, but it certainly doesn't adjust for all of it. Or if I'm doing this and then I go weekly, maybe they fixed it. But they seem to have fixed it. Okay, this didn't work properly 2 weeks ago, so I tried using the auto adjust and it did absolutely nothing. So there was obviously more bug fixes. Very glad to see that, and thank you for reminding me that feature exists. But yeah, thank you for hanging here with me, guys. Hit the like button. Obviously, I really appreciate all the brilliant questions and the challenging journeys that you guys are going through. Hopefully, some of my experiences and, some of the modifications in the approach can actually help you in your journey going forward. But yeah, enjoy the holiday, guys. Have a great time with your family if you do celebrate Thanksgiving, if you're over in the US. And I will see you all next Monday to hang again and to see whether we can find some nice trades for London. Hoping that DAX at some point comes back up into Topstep so that we can have some more dedicated moves during the London session. Until then, this has been the London session on TopstepTV. I'm Deeyana Angelo. Take care.